Welcome to Classic Value Investors. My name is Mariusz Skonieczny, and today I'm bringing back Robert Macleod, the CEO of Frontline. Robert, thank you very much for joining me again.
Thank you, Marius, for inviting me back on.
Robert, it's been about 20 days since we talked. Um, it seems like you know the negativity surrounding the oil tanker market seems to be abundant out there. So let's take a few minutes and maybe can you update us what's happening within Frontline and maybe the market in general ever since we talked last time?
Yeah, no, I think that's a good place to start. So, in terms of Frontline, we've maintained the same focus. We're very much focused on our chartering strategy. I feel we've had a very good start to the year, and it's over the last 3 weeks. It's remained volatile. If we go into the various segments, we've seen the Aframaxes come off. They have been the first ones to come off the floating storage. We've also seen the Suezmaxes come off, and they are now trading anywhere between $10,000 and $25,000 a day, depending on the voyage. So that's been the segment that I think isolated has been most hit by the lack of volumes recently. Whilst the VLCC, the sort of locomotive in the space, has in the tanker space, has had a very good performance, in my opinion. It's been around the 50-55 mark for most of June. Here in the recent week, or recent days actually, it's come off and it's now plus minus 40. Still keeping up pretty well in my book. The average earnings in the segment in 2019 was $36,000. At the same time last year, we were at $12,000. So I think the VLCC has been the best performer. It's very much driven by delays in the Far East and in India. So let's see how the summer gets on in terms of rates. But the summer is normally the weak period of the year. We have obviously been hit by or the whole industry has been hit by the production cuts. There is some unwinding of the floating storage, and I think we're off the peak. We reckon there was about 200 million barrels of floating storage, which is just north of 2 days world's consumption. That is coming off somewhat now, and that is obviously a negative. We're also seeing that the seaborne trade in general is the slower growth is evident. At the same time, I think, as I said, the seasonality in terms of the summer market it looks clear, but it's even more hit by the lack of volumes and the OPEC cuts, which were both instant and real, as we spoke about last time. So going forward here, I think we might be. It's very difficult to say. It's an extremely volatile market, and 2020 has been more volatile than any other of my 20 years in the tank industry. But if I was to guess here, I think we're past the point in terms of the low points of the volumes, and it looks to us that the oil demand in the world is coming back. So I wouldn't be surprised if we see the tanker market pick up, driven by volumes and potentially reversal of cuts here as we head into the second half of the year.
Thank you, thank you. You know, it's interesting because I get a lot of comments and I follow some conversations on Twitter. And as I mentioned before, the negativity around the sector seems to be just through the roof. And if you look at just Frontline over the last month or so that we talked, I mean, including the dividend that you just paid yesterday, it seems like the stock is actually up 4%, including the
Yeah,
dividend.
yeah, that's right. We paid a 70 cent just I think the day after we spoke last time. That was a record date, and yeah, no, and the volatility it's been extreme all the way through the year, and our focus here is just to run the business, our business, as best we can. As I said on our last call, we feel we have the best balance sheet we've probably ever had. We have some decent time charter coverage, And even now, when the market is down, we are still making money, and we are pretty confident in our setup. We have a very high quality fleet. So the volatility on the share is probably going to stay or for the sector in general. But what we are very focused on is to maintain the earnings. As I said last time, we make $23 million on an annualized basis for every $1,000 above 18.7. So that is without taking into account the time charter coverage. So we have pretty good protection. But we are, and none of the tanker companies are sheltered from the production cuts. The production cuts have been the most extreme the world has ever seen, and it had to hit earnings, and it's hit the Aframaxes and the Suezmaxes, only partly the VLCCs. So here going forward, let's see how the rates are, but we are at least in a very good position, and we've got a good setup. So I'm confident in the longer term. In the short term, then there might be further pressure on rates. We don't know, but I am. I'm pretty sure that the world oil demand picking up here is real, and we don't know. Any of us don't know the exact stats, but it looks like the world is coming into a more normal state, and that will see the third quarter eat into the inventories built in the second quarter, and there might be brighter times ahead. And also, as I said last time, I think the vessel supply or the availability of ships is being overlooked. I think it's going to be a lot tighter in the second half of the year due to especially dry dockings, and also that the delays that we're seeing now are probably here to stay for a while. So there are some factors on the supply side that will probably help us. But it's an extremely difficult market to predict. So it's all about us as a company to just remain as robust and hardworking as ever, and normally that gives good results.
Hmm. As I mentioned, you paid a nice dividend yesterday. Uh, does your capital allocation strategy change at all when it comes to the value of your company in the market? In other words, next quarter, do you still see doing another dividend, or do you ever consider doing maybe a buyback?
There's obviously various options available to the company, and this is something that the board will decide on in August. So all I will point towards is the history of the company, and that's a history of dividend payments. So I think we should just wait with that, and I'll address that along with the Q2 results in detail.
Yeah, okay. You mentioned about OPEC cuts, and I find it very interesting because if we rewind a little bit, when this COVID started, actually the first thing that happened from OPEC is that they actually increased production first, and when the production was increased, everyone in the market was like, oh, okay, they're increasing it, but they're going to cut it. Then they cut it. They were talking about what they're going to cut it, and they're going to cut it. And there's so much attention on the cuts and cuts. And I just find it really fascinating that why doesn't anyone talk about, okay, well, eventually they're going to stop cutting, and eventually they're going to increase production again. Why doesn't anyone ever talk about like more of the positives? Why is everyone so focused on the negative? And even if there are positives in front of us, they still focus on the negatives after the positives.
I mean, that's a great question, Maris. I think I did address the increased production briefly in one of my earlier answers. But one of my main jobs, or one of my parts in terms of talking about the market, is sometimes to try and highlight the parts that are actually positives. And I certainly don't want to be someone that only talks about the positives. We have to be realistic about the market, and at the moment there's pressure on rates. But your point on the reversal is a very valid one, and as I just mentioned, I think Q3 will see increased volumes, and I would not be surprised if OPEC reverses the cuts. And we know that there was an extraordinary cut from Saudi of 1.2 million barrels that has not been been extended, so that's coming back. We also know historically that there are grounds for, or often there is cheating going on in terms of volumes. There was a very high percentage of compliance here recently. That's a number to watch. But as we estimate in Q3, we believe that the oil market will be undersupplied by at least 3.5 million barrels a day, which is then 100 million barrels a month. Obviously, we've been building stock, but let's see where the oil price goes. A lot of producers are now getting 4 to 5 times more than what they got at the bottom. So looking at the West African producers and so forth, I expect volumes to come back. So I think, again, that we are at the bottom, and there are some tailwinds that will help us going forward. But again, I highlight to all listeners here, it's a very volatile market, and I'm not going to give any guarantees whatsoever, but I have a constructive view of the market going forward. I think that oil demand is looking to return, and it's looking healthy. I think the refineries will therefore increase their runs, and that will give increased arbitrage opportunities in the oil markets. We're seeing Libya potentially return with volume, and importantly, like we touched on earlier, the supply fleet growth. The supply there, I think is tighter than most are talking about. And I also think that, and I didn't think this coming into the year, but there is potential for some scrapping. So that will tighten, and also there's the wild card in sanctions. So although there's a lot of headwinds at the moment, we do have some tailwinds that suddenly help us come back. But the main tailwind is return of volumes. And unless there's a second wave of the virus and lockdowns and oil consumption or demand drops back, then I think there's a good chance that we'll have some tailwinds going forward.
You touched a little bit on scrapping, and that was actually my next question I was going to ask you. Uh, in order for some scrapping to happen, do we need to see the rates come down a little bit more, or do you think they are already at levels where you could see some scrapping?
I think in the VLCCs, it's getting close to where you could see, and that's then for the older ships, obviously. And if you're facing a dry docking that will cost you $5 million, and you can achieve 12 or 13 or 14 million income by scrapping. There's a chance that you'll see some, but normally or not normally, but what could also be the case is that people have a constructive view, like I just put out. I think it's easier to have a constructive view having modern ships than older ships, but it could also be that people will be a little bit patient and wait and see here till August, September to see if the market returns. So it's a tricky one. A few months ago, I did not expect any scrapping this year, but I think the chance of some scrapping for 2020 is now increasing. But it's probably going to be into Q4. It's probably not something that's going to happen here immediately, unless you have a ship that will face a very high dry dock cost.
And you said it was on the VLCC side. What about Aframax and Suezmax, because they came off much harder?
Yes, yeah, no, it's absolutely the same scenario there, and there the decision will be quicker. So, but when it comes to scrapping, for a natural reason, I always focus on the VLCC segment being the locomotive. But thanks for highlighting, because it's certainly the case for Suezmaxes and Aframaxes, and it's an easier and quicker decision there.
Okay, now I wanted to touch a little bit about the floating storage, because from what I'm seeing right now, the floating storage is being drawn down pretty fast. And maybe this is a little bit of a stupid question, but uh, I was a little bit confused by someone's comment. Like, is there a difference between, what's the difference between destocking and floating storage?
So the destocking will then be the exit from the floating storage, and we've seen. So if you just go back 3 months, then I was extremely bullish for the summer. We were seeing the floating storage building, and then the oil price turned, given the effectiveness of the cuts, and then the build of storage basically stopped, and then we had a correction in rates. So I got the summer wrong for sure. But the scenario we're also looking at with the build over the summer was that this would lead to a hangover coming into the second half of the year and into 2021. What's happening now is that we've already peaked, as you said, on floating storage. Our estimate is that we were around the 200 million barrel mark. Where we are now, we don't have any exact figures, but if I was to guess, I would think somewhere between 150 and 170. So we have reversed, which is a positive, because what this means is that we will hopefully return to more sort of a normal market, and the hangover we were all expecting after a very, very strong summer will then be more of a normal tanker market where you have seasonality, and the next sort of uptick in terms of seasonality, which I will think will coincide nicely with potential increase in volumes, will then happen in August, September, when the oil markets start preparing for winter in the northern hemisphere.
When it comes to the optic, I'm not sure if you follow the dry bulk market, but from what I understand, there was a little bit of well, not a little bit, there was an uptick in rates caused by the recovery in the economy and all sorts of things. And I had a conversation with Robert Bugbee from Scorpio Tankers, and he was talking about how he thinks that if the destocking continues the way it does, we might actually see uptick in tanker rates sometime around Q4 and maybe even Q1, and that could be very positive in terms of um, investor sentiment when it comes to the tanker rates. Do you see it the same way, or do you see it differently?
No, I think I see it the same way, and rather than Q4, Q1, I think it's more a Q3, Q4 event, and I think it's pretty much for the various reasons I explained in my earlier answer. Again, we know about the risk, but it does feel like the volumes will increase going forward. We know we are sort of eating into the inventories being built. So no, we are constructive here going forward, and having a summer like we have now is certainly not abnormal. But I think for all the investors out there, it's been, and I think a lot of new investors have entered the space. And when you enter a space that's seeing the highest level of volatility in decades, then it's a pretty scary thing, right? And we see how it's like, as you said, only 3 weeks ago we had the same run through, and the stock went up. Went up to 25%, almost touched 9, and now we're almost back to where we were, and that volatility will stay. So I think it's important when looking at the space. I think it's important to have a sort of a long-term view, and then look very carefully at where companies are in terms of risk, where is the cash break even, what is the earnings potential, and what's the history of the company. So I think on these various boxes, we as Frontline should tick pretty well. So that is that. But I think it's very, very important to have the sort of not the 1 week view about this. One should have a view about oil and the world. I think that's really where it starts. If one thinks that the world will not return over the next 6 to 12 months, and it will be down 10% of oil on oil demand from January 2020 level, then tankers is probably not the space to be in. If you share our view that the world will return and the oil demand picture looks like a V-shaped recovery, then it's probably something to look at. So it's never easy, and it's a volatile and risky business. But we've been in it for a long time. So we should or we have our ducks in line, and should hopefully outperform the rest.
When it comes to Frontline talking to some institutional investors, are you having different conversations with institutional investors right now that you had maybe 4 weeks ago? And are you talking to the same people at the table, or do you see new faces coming into the space?
I would rather look at the short term 4 weeks. I'd say so far this year there's been probably more interest from the institutional than before. I think the general interest for the space has increased, but in terms of the otherwise, there's not big changes, especially not in Europe. In the States, there's some new ones, and there are also quite a few that come back that enjoyed very good earnings with us in the last upcycle, especially the '03 to '08 period.
Okay. Um, and yeah, the last question that I have for you is when investors evaluate tanker companies, they like to look at uh, net asset values and the discount or premium that they are trading in relation to each other. Uh, I've heard some talk about people talking about, okay, they might be trading at a discount to NAV, but NAV might actually come down. Uh, could you maybe talk a little bit about how NAV or the values of ships can change or is changing in the current environment, both up or down?
Yeah, so the NAV focus is very much in place, and that's been in place for a long time. Rightly or wrongly, I think for many reasons it's wrongly, but obviously it's still a very important parameter when you look at a company. But I think the other parameter which I mentioned earlier, which is the cash break-even level, it's the coverage on time charter, it's the access to finance, it's the sponsorship of the company where we're in a unique position having Mr. Fredrickson as the main shareholder. So I think it's important to look at that, but the industry as a whole now, I think everybody's trading at premium. Frontline, if you look at history, then we are normally the premium priced company. I think if you look back here, it's like 1.3 to 1.5 times NAV. We're certainly not there at the moment, and we've this has come and gone many times in the past, and now it's gone, and normally it comes back. So I expect that to happen this time as well. But I think it's important from an investor point of view to look a little bit deeper than just the NAV.
Okay. Um, yeah, Ido, fantastic. Thank you for agreeing to do this update. I think a lot of people are we're looking forward to it. So yeah, I don't have any more questions for today. Any final thoughts that you wanna talk about before we wrap it up?
No, I think Barry, I'd just like to thank you for inviting me to talk on an update here, and I think we've covered the various bases, and we spoke about the volatility and the risk, and we'll just keep focused on running the company as best we can.
Okay, thank you very much.
Thank you.